Thanks to the conflict emerging in the Middle East, we are now seeing volatility in the stock market, with most stocks getting crushed, besides the oil and gas industry and a few others. JP Morgan's now warning that oil could spike to $120 per barrel. Brent crude has already surged over 15% since February 28th, and we're seeing massive price spikes in European natural gas prices, some of the biggest moves since the 2022 energy crisis. Because of attacks from both Israel and the United States, as well as Iran, oil and gas assets in the area have been negatively impacted, the largest issue being the Strait of Hormuz, which is a choke point between the Persian Gulf and the Arabian Sea. Any issue with the flow of vessels through that shipping lane blocks off the Arabian states like Qatar, Bahrain, and the UAE. It's a vital area because just in 2024 alone, roughly 20 million barrels of oil transited that waterway every single day, which is roughly 20% of all petroleum products consumed globally. Around 85% of that crude oil is sent to Asian countries like China, India, Japan, and other large energy consumers there. Additionally, 20% of the world's LNG exports travel out of this region, mostly from Qatar. Iran has been threatening any vessels in the region and has been proclaiming that the strait is closed. They're saying that they'll attack any ship that enters the Persian Gulf, and theoretically, as far as we know, the strait is actually still open, but traffic has dramatically slowed. It's down at least 80%, and most of the largest shipping companies have suspended operations, and insurance providers for shipping vessels have pulled coverage off of any ships in that region. The very large crude carriers, aka VLCCs, are typically the largest ships in use and can move 2 million barrels of oil per trip. 6 months ago, those vessels were charging day rates of around $80,000, which is how much they charge to be chartered per day to transport oil for whichever company hires them. Now rates have soared to over $400,000 at its peak, thanks to the risk of transporting oil in this region. Day rates on other routes have also spiked, but they're obviously going to be lower than tankers in the Middle East. Disruptions to any portion of this fleet will impact the market and jack up prices across the world. The interesting thing is that President Trump posted on Truth Social that he's ordered the U.S. Development Finance Corporation to immediately provide political risk insurance and guarantees for all maritime trade in this area. He's claiming that he will get the United States Navy to escort tankers through the Strait of Hormuz as soon as possible. And while this did dampen the market reaction to volatility in the region, the reality is the United States is in no position to make this type of guarantee. Iran can still put mines in the water and can fire missiles at tankers if they choose to. Calvin Froge, the developer of the maritime analytics platform Marhelm, is a seasoned oil tanker investor, and he outlined on Twitter why what Trump was proposing would be impossible. I've been following Calvin for years since I invested in DHC Holdings back in 2020 during the disruptions from COVID, and he knows what he's talking about. So I'll read out most of what he wrote. It's a bit long, but it provides important context here. So he said the following: if Trump is going to individually escort tankers through the strait, you're talking about an enormously expensive operation which requires many ships as well as tight air support. Even a single inexpensive aerial or naval drone can cause extensive damage to a tanker worth tens or hundreds of millions of dollars. Protecting these ships requires overkill. The Houthis during the Red Sea conflict were able to dramatically reduce the number of ships sailing through, and unlike the Red Sea conflict, where ships can take the longer route around South Africa, there are very few paths to exporting oil and petroleum products from the Persian Gulf. The U.S. Navy and Air Force attempted to suppress Houthi interference in Red Sea shipping, and in the several years that the Red Sea has been partially blocked, throughput has remained at less than half of pre-conflict levels, with many episodes where throughput dropped to near zero. The Houthis were able to score direct hits on many ships, and U.S. soldiers and assets have been lost. And this was not against Iran, this was against the Houthis, who do not have the indigenous weapons platform production that Iran has. The Houthis were completely dependent on their pre-conflict storage of weapons and whatever Iran could smuggle to them. And yet, even this faction, in one of the poorest countries on earth, Yemen, was able to dramatically impact global maritime flows. The setup with Iran is exponentially more dangerous. Iran does not simply need to attack tankers, and the United States does not just need to protect them. The United States has to protect all of the upstream energy-producing assets that fill those tankers as well. They need to protect the pipelines, the refineries, the petrochemical plants, the storage tanks for oil. The U.S. largely abandoned a similar escort strategy during the Red Sea conflict. In fact, an entire coalition of U.S. and European naval forces along with Gulf states, attempted this against the Houthis previously, and that campaign was an utter failure. And the ultimate conclusion from the US military leadership was that it was much better risk-reward to focus on suppressing strike capabilities. Yet after months of airstrikes, Red Sea traffic has never fully returned." End quote. So the idea that the United States is going to fully defend all these vessels simply does not stand up to scrutiny. And if Trump does try to force this, then that puts them in a vulnerable position to get struck by Iran, and that seems unlikely to me. So with that said, now let's walk through all the major oil and gas assets that have been disrupted across the region. Now the Strait of Hormuz is bad enough, but various infrastructure has been targeted as well. Starting off with Qatar, Iranian drones struck Qatar Energy's facilities at both Ras Laffan Industrial City and Masaid Industrial City. Ras Laffan is the world's largest LNG export complex, and it processes gas from the massive North Field that Qatar shares with Iran, and it accounts for roughly a fifth of global LNG supply. Qatar Energy has halted all production, and it can take weeks, if not longer, to restart back to full production levels. In Saudi Arabia, 2 drones targeted Saudi Aramco's Ras Tanura refinery, one of the largest oil processing facilities in the world, with a capacity of 550,000 barrels per day. It's also a critical export terminal for Saudi crude. Now, Saudi air defenses intercepted the drones, but a small fire broke out and Aramco shut the entire refinery down as a precautionary measure. Over in Iraqi Kurdistan, companies including DNO, Gulf Keystone Petroleum, Dana Gas, and HKN Energy have all halted production at their fields. The area was exporting 200,000 barrels per day via pipelines to Turkey, and that's now stopped. No physical damage reported, as these are precautionary measures, but the barrels are off the market now. Iraq's Rumalia oil field has also been shut down, which produces a third of the country's oil output, and even more assets in the region will have to be halted if the blockage of the Strait of Hormuz is not remediated soon, as oil storage tanks fill up. Now over in Israel, the Israeli government ordered Chevron to temporarily shut down the Leviathan gas field, their giant offshore platform, and Chevron also operates the Tamar gas field as well. Now those shutdowns throttle gas exports to Egypt and Jordan, creating cascading supply problems across the eastern Mediterranean. And in Iran, explosions were reported at Karg Island, which handles 90% of Iran's crude exports. Now the extent of the damage is unclear still, but if Karg Island is seriously compromised, you're looking at a potential loss of approximately 1.5 to 2 million barrels per day that Iran was exporting, most of that to China. And then we also have the oil tankers themselves, because at least 5 commercial vessels have been struck in or near the strait by Iranian drones, so the risk is real. This is some of the worst levels of disruption oil and gas assets in the Middle East have ever seen, and it's all happening at once. Now, Rystad Energy, an analytics consulting firm in the energy sector, a pretty famous one, is estimating that everything going on so far is not going to lead to a long-term pricing spiral, at least in the LNG markets, but that all depends on how long this war ultimately lasts. Now, in terms of investment options to benefit from all this chaos, you may think with tanker day rates skyrocketing, it might be a good idea to invest in oil tanker stocks. But in a bit of a roundabout way, it actually won't be if long-term disruptions continue, as we've already seen with China stalling diesel and gasoline exports. Countries may actually start hoarding their energy production, which would cause the demand for tankers and transportation to plummet. So day rates might see a temporary spike and then crash. You just have to play it by ear. If this situation gets cleared up soon, then companies like Frontline, ticker FRO, and DHT Holdings, ticker DHT, could be interesting, as their fleets have a large number of VLCC tankers out of all the public tanker stocks. Now, that's not an endorsement of those companies. I'm just saying that those are options to look into. I have not researched these companies in a long time. In a previous video I made about the last Israel and Iran conflict, I outlined different defense contractor stocks or oil and gas companies that could be interesting, so I'll link that video in the description if you want to take a look at those. And then I'll also make a separate video on different sectors that may benefit from this chaos, namely petrochemical and fertilizer companies, as those industries are being disrupted as well due to the closure of the strait. We could see the situation grow increasingly dire if the Houthis in Yemen decide to join in with Iran and start bombing ships in the Red Sea again, threatening trade through the Suez Canal as well. But again, it all depends on how things unfold in the coming weeks, if not months, and we'll continue to follow the events as they unfold. Thanks for watching.